Okay, well, welcome everybody. I'm super excited today to bring to you Julie Stewart. She and I have met several times here locally in Colorado Springs. She's a fantastic woman. She's a superwoman when it comes to being a mom and a top producer at her company. So I'd love to introduce to you Julie Stewart. Julie, why don't you go ahead and do an intro as far as all of your work credentials?
Sure, absolutely. And first, I want to say thank you so much for thinking of me and including me in your efforts. And I hope this can be a blessing to everyone who listens to this. So yeah, I'm a financial advisor. I've been in the business off and on since 2004 in a variety of capacities. First of all, from a personal perspective, I'm a mother of 5 kids. My oldest is 13 and my youngest is 7. And first became an advisor in 2004, then took some time off, obviously, to have a few kids, and came back into the workplace in 2015 in the capacity of an advisor. My primary focus, and I think the capacity in which I have the most impact for my clients, is tax mitigation and diversification. And what I mean by that, by diversification, is really what we're drilling down on is beyond stocks, bonds, and cash. So we're looking at the wrappers of the investments that we use to truly diversify across pre-tax, post-tax, safe money, and aggressive money. And what that enables our clients to do is to pivot in any tax or market environment. So if taxes are going up, we know what to do. If taxes are going down, we know what to do. If the market is behaving like it has over the past 3 months, we know exactly what to do. We have resources to fall back on. And if we're in a bull market where the Dow Jones is screaming ahead, then we have resources there. And the biggest area that this is really where we need to focus on this is when you are immediately pre-retirement or at retirement. So I have clients over the past 90 days who were looking at retirement, and a huge percentage of their portfolio was erased overnight. So we really need to be very aware of the type of wrappers that we choose in our investments. We need to be aware of the role of the IRS as a, shall we say, a ghost partner in our investments. And also we need to be very aware of volatility, particularly when we are very close to retirement or at retirement, just so we know exactly how that plays out. So yeah, that's what I do.
Absolutely. Well, thanks for coming on, because you have some fantastic stories. Fantastic in the sense that it was sad, but I think from an insurance perspective, your stories really hit it right at the core as to why insurance is so very important. So I'd like to open up the floor and just let you. I know you have a few different ideas here to share with us.
Absolutely. And you, obviously, Deborah, you have experience in the industry, so you've seen stories similar to what I'm about to share. And what I'm going to do today is remove the, shall we say, the product technicalities. We're not talking about products, we're talking about general concepts that affect all Americans. And unfortunately, it affects us whether we like it or not. So the first thing I would say, one of my former mentors in the business would say to us, we're all going to become disabled and we're all going to die. And the question is, how far apart do those events happen? They could happen on the same day. They could happen decades apart. And it's up to us to anticipate that possibility and prepare. In my opinion, a lot of financial planning is an emotional process. And we need to understand that the people that we love will be talking about us after we die. And we can actually control that narrative to some extent, right?
Yeah, that's a profound statement.
Yes. One of the first meetings I had as an agent was with a very successful real estate agent here in Colorado Springs. So, obviously I was really excited about the idea of bringing him on as a client. And one of the first things out of his mouth is he said, you know what, when my dad died, he left me with a bill. Mm. That's what he said about his dad. And I'm sure he loved his dad, right? We all have issues with our parents and so on and so forth. But you will be spoken of after you pass away. The financial planning process is largely a process that enables us to express love to our family and loved ones. It's a process that enables us to express love.
Right.
And particularly in this environment right now, we have a lot of folks who are very hesitant to make commitments. They're very hesitant to put things on paper just because of all the uncertainty in the market. And so everything that we're about to discuss, I believe, can be implemented on a very simple and inexpensive level. And obviously, if you have an advisor, talk to your advisor. If you don't have an advisor, ask around and find one. We want to be doing business with people that we trust. But everything that I'm advocating in this recording can be implemented on a very inexpensive and simple level. I mean, we're talking about max maybe $500 a year, including your will and some term life insurance. Okay. So I want to put that out there in advance. I am certainly not advocating for people to bite off more than they can chew at this particular juncture, but we do want to put things in place that protect our loved ones.
Yeah, I think that's a great example because, a lot of us have car insurance and we probably won't ever use it, but it's just that protection and knowing if anything ever happens to our car, we have coverage. Where with life insurance, we know for sure something's going to happen. So do something. I think that's the narrative. Do something. It can be small or big, but do something.
Yeah, I've actually had people cancel their life insurance saying, well, I've never had to use it. I've literally heard that. So we all know, again, circling back to that statement, we know that we're going to become disabled and we know that we're going to die. Mm-hmm. The question is, how far apart do those two things occur? And your value as a producer is far greater than the value of your car or your home. If you need to know the value of what you produce, meet with your financial advisor and they can put a number on what you're worth until, you reach retirement age, and you will be astounded. Human beings are worth a lot of money. And above and beyond that, let's talk about what happens to your family when you get sick or die. Because what happens is when you do not put your planning in place, it adds insult to injury. So you pass away and you do not have your planning in place, and your loved ones are scrambling to fix all of the legal and financial problems that occur simply as a result of your passing. You may have not messed anything up economically, but if you do not have your ducks in a row, the people you leave behind will not be having fun.
Exactly.
There is no other way you can put it. And so I have two case studies today for you, specifically referring to what happens when we do not have our planning in place. And what I'm going to try to do is remove the names of the living and the dead so that we can maintain some anonymity. But the first case would be a young man, who's my age, about 43 years old, recently passed away. He passed away about a month ago. So this specific case, 43-year-old man-ish, and the family environment is that he was a heavy lifter as a young man and had used a lot of steroids. So his body was beat up. He was living with his mother and father, right? So they're in their 60s. This man also had an estranged wife from whom he was not divorced. In addition to the 43-year-old man living with his parents, his two sons with the estranged wife are also living with the grandparents. Unfortunately, this scenario is not unusual.
Yeah, I was just going to say, I think that's pretty normal.
Mm-hmm. Very, very common. And so I feel like the scenario that I'm describing, I think most of your listeners and my listeners can relate to. So 43-year-old man, his two sons living with his parents in their early to mid 60s. He gets diagnosed with a heart condition related to his lifting and juicing and things like that. So he was aware that he was essentially terminal. And his mother, the grandmother, was trying to get him to do a will to put things in place. And one night he went out with his friends. They were not partying. Like, he was just visiting with his friends, driving around in the back of his friend's car, and they heard him gurgle and turn around, and he's dead.
Oh my goodness.
It was not a precipitous event. They knew he was ill. He's hanging out with his friends, trying to get a little bit of companionship, hear him gurgle in the backseat, and he's dead.
Oh my goodness.
So now the situation is we have grandmother, grandfather, his two sons. Oh, and by the way, what I forgot to mention, one of the sons is learning disabled. The learning disabled son now has a pregnant girlfriend.
Oh my gosh.
There are no plans in place. So there's no life insurance, no will, and an estranged wife who happens to be next of kin, even though she has not been in this man's life for about 10 years.
Right, but legally they never dissolved the marriage.
Correct, exactly. Oh. For whatever reason, maybe he couldn't handle it emotionally, but we all have our emotional struggles. We know people who have gone through the same thing. So what I'm trying to describe here is actually a very common American scenario. This is normal. So the grandmother is essentially taking care of the disabled son because he doesn't have the capacity to care for himself. She now no longer has any income to care for his son. And we now have a pregnant girlfriend. And this woman, bless her heart, is avowing that she will take care of her great-grandchild. Enter into the scenario the estranged wife who wants access to his Social Security benefits and access to any physical assets that he had. Specifically, he bought a really fun Camaro before he passed away, and she wants that, even though she hasn't been a part of his life or the children's life for 10 years. And the sum total of this story is that if we could have purchased a very cheap term life insurance policy when he was a young man, and I do believe that he should have divorced his wife just to keep things clean. Right. We have this conversation. Doing things legitimately has value, even though we don't like paying lawyers or we don't like going through the rigmarole. There is tremendous value in that because it makes things very clean for the people who outlive you. Absolutely. So if he could have divorced his wife, that would have been amazing, but he didn't. But above and beyond that, he also did not have a will. So the scenario now is that the grandmother is now fighting the estranged wife so that she can take care of her grandson and then potentially the great-grandchild. And this is, like I said earlier, this is adding insult to injury. So instead of being in a scenario where she can mourn her son, none of us should ever have to see our children predecease us. Right. And I am praying for every single soul that we never have to see a child die before us. This is devastating to this woman. 43-year-old son who should have been in his prime, bringing dinner over to her on a Sunday afternoon, whatever, She now has to bury this child and work out all of the financial details. So point number one, there is a place for doing things in a legitimate fashion, and it protects you and it protects the people that you love. So point number one, do things in a legitimate fashion. Point number two, make hay while the sun is shining, which is while you are still young and insurable, buy yourself some life insurance, and it's super, super cheap. If you're healthy, it should be pretty easy to go through underwriting. Be careful about the company that you choose. And then later on, when you decide to buy more or you want to convert into a different product, if you're with the right company, you can do that. But for the time being, at a minimum, protect your family. The age at which this particular man died, he would have been covered by a term life insurance policy.
Absolutely. And to just think of, expenses, and we don't have to get into how much insurance coverage he should have had, but a funeral is typically $10,000. And so thinking of this poor lady that she's already, probably in a financial situation where she's raising her grandchildren and she has her adult son living with her. Now she has to come up with at least $10,000 to bury the guy. On top of that, all this extra money to go through the legal processes to get to try and convince the court system that she can have the Social Security, that she can keep custody of the kids. And then, all that traumatic baggage with the poor kids losing their father, and she's lost her son, which is normal. Anybody would go through that process, but to add, like you said, add insult to injury, to think that now they have all of this legal issue that they have to go through.
Absolutely. And so think of, in this particular scenario, think of a life insurance policy really as a gift. And I think you had shared a story about your family. Thank goodness for life insurance policies when they are in force.
Absolutely.
And the fact of the matter is, if people didn't die prematurely, these contracts wouldn't exist.
Exactly.
And so it really is a gift. So your family can say after the fact, thank goodness that my brother or my sister or my father or whatever, thank goodness that they bought that contract, because I'll tell you what, I had the check in the mail when I needed it, and I didn't have to think about anything else except mourning my relative.
Yes.
It's a gift.
Yes.
So, prayers for this specific family. They're still going through this, and it's very sad. It's very sad to see what's happening. One thing that comes to mind before we move on is if you do have these types of this type of planning in place where you have your life insurance and you have your will, maybe a trust, right? In the case of like a special needs trust or things like this, do not neglect to review the terms of that contract every single year. When I first became an agent, we had a case in my office where a young man passed away. He had originally purchased a term life insurance contract, and his girlfriend was the named beneficiary.
Oh.
Do I even need to say anything else? So when he died, the ex-girlfriend got $1 million check, and who do you think was not going to turn the money over to his family? So out of respect to yourself, make sure that you review your contracts every single year. Even if you don't have an agent that's calling you, you make sure you call them. If you have a change of circumstance where you need to remove somebody from your policy, by all means do it, because again, we don't want to add insult to injury.
Absolutely. Oh, that's great advice.
Do things legitimately. So if you have maybe a girlfriend or a boyfriend and you have minor children, don't name the girlfriend or the boyfriend as beneficiary. Set up a trust. You might not want to drop $2,000 to set it up, but it's in the interest of your kids, So, so on that note, I would like to continue on to my second case study. And again, I'm going to try to keep the identities of the living and deceased parties. So this was a case of a 60, let's say early 60s male extremely intelligent. This person had a very good career in engineering. He was not a stupid man. And following his divorce, this man decided to not name any beneficiaries on his IRAs. He did not have any life insurance. He did not have a will and did not have any long-term care. Now, before I go further into the story, what I want to observe is that we as humans have a tendency to think that we know how we're going to die. And I think I mentioned this to you the first time we met. So I've got one side of the family that has amazing longevity, amazing health. They die in their beds at 90 years old. And then I have another side of my family who, nobody lives past the age of 60. Mm-hmm. Well, in my head, who do you think I'm going to be like?
Oh, yeah, the longest living relative.
Right. So I've decided that I'm going to die like this side of the family and not like this side of the family. And this is not unusual. We all think this way. Mm-hmm. I think there's these little kernels inside our head that make us think that we're going to live forever and nothing bad is going to happen. Mm-hmm. And we're going to have this amazing, life, and we're going to die peacefully in our beds. Well, I'm here to tell you, if you're listening to this recording, please reconsider, because we don't know how we're going to die. So this particular person, I believe, thought that he was going to have a very long life. Got put into early retirement, and of course then he developed dementia, which is not an unusual scenario. We know that once people stop working, that it really impacts their longevity. Developed early onset dementia, and again, no will, no life insurance, no long-term care, did not even have beneficiaries on the IRAs that he had. So once you develop dementia, this is also true of any illness or incapacity where you are not able to make decisions for yourself. So if you're in a car accident and you are incapacitated and you cannot make decisions for yourself, this is what is going to happen. This person developed dementia, and his family had to take him to court to have him declared incapacitated. He was so ill that he thought he was in court related to his divorce that had happened 30 years prior. That's how ill he was.
Oh my goodness.
So family got, the family was named, they could make this medical decisions for him. And during the course of that process, the family discovered that he had lost a very substantial amount of money on the stock market while he was day trading.
Oh.
Now, there were 3 children involved. One of the children had a very lukewarm relationship with this man. The youngest child had a very resistant relationship. So the youngest child had no interest in being a part of this man's life. When he died, what do you think happened?
Oh, isn't it funny how out of the woodwork comes all these relatives and all of a sudden are best friends with the now deceased or the person that's dying or sick? Yeah, yes. It's sick.
Yes. And so the youngest child, who had no interest in having a relationship with this man, all of a sudden comes out of the woodwork, just like the previous story with the wife that was kind of hanging out on the sidelines. Death brings out the worst in everyone. If yes. You want to see your family and your friends in their most infantile state, all you have to do is look at people who have experienced a death.
Yes.
And you will see them fighting over things that things that happened when they were 2 years old. You will see people in their most infantile state. So during the course of this man's illness, now this is where we get into the long-term care piece. All of his assets were invested in the market. And the market was going up and going down and going up and going down. And so every time the family would need to pay his bills, they would have to go to the broker and say, hey, broker, I need you to sell X amount of shares. And the broker would say, well, these are thinly traded stocks. I don't think there's enough of a market right now to sell these shares. So again, what we want to do is we want to do things legitimately, and we want to have the planning in place so that the people that you love do not have to fight with each other.
Right.
This family has been torn apart, and this is not the first or the last time that any of your listeners will hear this. Most likely these people will never talk to each other again. 1 year of care for this client cost about $100,000. And oh, by the way, most of that was taxable because he did not have any insurance policies. He did not have a life insurance policy. And again, the market's up and down and up and down. Well, this could have been addressed by having a long-term care policy.
Right.
Now, we're not going to get into long-term care today, but long-term care is actually more affordable than most people think. But because we're told that it's going to cost you $1,000 a month to buy a policy, most people never even engage in a conversation with their advisor, even if they have one. So long-term care is a big deal. If you make it to the age of 65, you have a 75% chance of ending up in a facility. Now, you tell me, based on current economic conditions, do you think the government is going to continue to fund long-term care?
No.
Which they barely do right now, but do you think that's right? I mean,
right.
I
And then you see the difference in care that someone gets if they're paying privately or if they're paying through Medicaid.
Absolutely. Absolutely. So now in this particular scenario, I don't necessarily think life insurance would have been too hugely beneficial, except for maybe increasing the amount of assets that could have stayed inside the family. But definitely a long-term care policy would have been tremendously beneficial. And again, find an estate planning attorney. They are all over the place. They would love to do business with you, and they can help you very easily and very inexpensively, because this particular client, if he had intended for all 3 of his children to inherit assets, he could have put that in writing. If he did not want all 3 of his children to inherit his assets, he could have put that in writing as well. And then there could have been less infighting. But now we have destroyed relationships all over the map because everybody, again, wants to regress to their most infantile state and fight over pennies. I've heard stories of people going to court over inheriting $5,000 or $6,000.
Oh my goodness.
What is this? You know, like you can't even hire an attorney for less than $3,000.
Right.
So,
well, and I've seen people fight over a goldfish. You know, they want the goldfish, and one kid took it and the other kid wants it. And I'm not talking kids. These are grown adults, but they're like you say, they're acting just like infants.
Yes. You know, my florist who helped me with my wedding, she was telling me that her kids still fight with each other because one child got a horse, because this child is living out somewhere up in the mountains, and the other child is living with, you know, another parent in the city. Well, the child up in the mountains got a horse, and the child living in the apartment in the city didn't get the horse. And so now these adults hate each other because one kid got a horse and the other kid didn't. And they're still fighting over this. And so these are the conversations that we need to know are going to happen after we die. And then they're going to say, oh, my dad or my mom, they didn't do anything, and now I have to fight with you. And oh, they didn't love me and they loved you more. So let's control the narrative. Let's control the narrative. If I want my children to know that I love them, I am going to put every one of their names in my legal documentation. And my husband, I'm going to put all their names in my will and my trust, and I am going to have the money to fund the estate planning that I've put into place. And it's because I want them all to know that I love them enough to go, I'm going to become sick and I'm going to die. And I want them to be standing around my casket going, oh man, we loved mom, instead of, oh, she didn't do what, all these crazy thoughts that come into play, after one has passed away. And I really do feel like, I mean, Deborah, you can probably go through a million and one stories.
Right.
And I can too. And every single listener is going to be able to do the same thing. There's a very simple way to do the right thing. And especially right now when unemployment is skyrocketing, we have a whole lot of uncertainty in the market. These things are very simple. They're very simple. And if you can't put together a fantasy financial plan, you can do little bits.
Yes.
And so I would absolutely implore every single person that listens to this, put this in place before anything else goes wrong, and regardless of how you feel about COVID or anything else, we're always faced with death.
Yes, absolutely.
And so, every single time we get into a car to drive our kids to school or to drive to work, we're potentially facing danger. And so I would ask everyone who hears this recording to really, really consider your mortality. And this is not grim. I'm not trying to be the Grim Reaper. I'm not trying to be Debbie Downer. Let's just talk about reality. And you do have the tools. You have
Absolutely.
the tools. So yeah, and that those two case studies are really kind of my shining examples of what not to do. And of course, you or I, if we can be resources to anybody, absolutely reach out, because this is real. This is not doomsday stuff.
It is. Yeah, I just echo that. I think that we could take, an hour or two and make a phone call to set up a will, to set up the trust, to set up the life insurance policies, just have that initial conversation. Like if I needed something, I could give you a call, Julie, and say, this is my situation. Maybe it's changed, because anytime we have life events, whether we're having a new baby or we just got married or we just got divorced, whatever it is, we need to, like you said, take a look at these documents and see, are these still meeting my needs today? And likely they won't be. I look at mine every year. I try to keep it in a nice binder so my husband knows exactly where it's at. And not just my husband, I've let other people know, because what if, my husband and I both perish in a car accident or a plane accident or something? So everybody in the family needs to know, where is this important document at? Or in my case, I have a binder that has, the cemetery plots and the life insurance policy and the will and all these different things, so that the people that are left behind will know what to do. Because I've had enough funerals in my life where I've been the person planning the funeral and find out that, oh, they don't have a will. Well, where am I supposed to put them? Just these basic things of, what is your wish? Where would you like to be buried? Where do you want to be cremated or buried? Those types of things. And then if there's insurance that can help fund that, and then the insurance that's left behind for those that are left behind, to kind of pick up the pieces, and if it's a married woman with kids and maybe she's not working, or her income won't pay all the bills each month, how is she going to make ends meet? So those are the conversations to have with your advisor. But yeah, I just echo what you said. Now's the time. We can't keep waiting and think it's not going to happen, because we know for sure it's going to happen. It's just a matter of when.
Absolutely. And to kind of dovetail on what you just said, there's a lot of folks, maybe the single moms or, lower income folks who are very hesitant to do these things. And I would say the more tenuous our financial situation, the more important it becomes. Just purely out of a needs situation. And then of course, as you get into the higher income levels, well, then it becomes an issue of tax mitigation. So if we have so many assets and we can't possibly outlive our assets, so somebody's going to inherit something, there's going to be taxes on this, and why not pay the taxes with a life insurance policy? So what we see, particularly with lower wage earners, is if you have, maybe you have a couple spouses, in their 40s and they have some younger children and one of them dies. Well, the one spouse will be able to, generally, they're going to make ends meet while they're able to earn money. But the shortfall comes in when they hit retirement and that other spouse's income has never been replaced.
Yes.
And so all of a sudden, the children are adults and they're looking at their parents thinking, man, my mom or my dad could have had a completely different retirement scenario if there was just a life insurance policy in place. And so I'm hoping that this conversation will open some eyes, maybe. Life insurance is not an intangible. This is not a luxury item, especially if you have young children or if you are in a situation. So like, in my scenario, my husband is a retired soldier. His pension is awesome. I don't want to lose his pension.
Right.
Guess who has life insurance on the retired soldier? His pension is amazing. And it really does. We're building a lifestyle together. He and I have a lifestyle together and his pension is a part of that. And so we have insured his pension.
Yes.
So, just really, I would just really invite people to not discount the value, the economic value that you bring to your spouse, that you bring to your children, even your parents, because, while you're around, your parents can rely on you to take care of them in their old age, right? So that's economic value. So please do not discount how much you're worth in dollar signs, unfortunately, because you are an asset. As long as you are living and working, you are an asset to the folks around you. So, if you really love people, put something in place to preserve that value, and they will speak highly of you. They will love you forever because you have the insight to go, hey, I love this person and I'm gonna take action on that.
Absolutely.
Yeah.
Yeah, that's great. Thank you so much for sharing those two stories. I think they are very common. Both of them are very common. And you hit a young person in their 40s that died unexpectedly, and then an elderly person that unfortunately got dementia. And how many people are we seeing that happen to now? We used to not see it that often, but now it seems to be so common. And then, you hate to think of it this way, but when a person dies instantly and unexpectedly, you have a lot of financial strain right away. Where if a person is having, a long-term care situation, and they could be any age truly, but we think about it more often in the people that are older, that could go on for years and years of, the financial strain on the family, trying to make sure that the person's being taken care of well. So to just have a product in place to take care of that financial aspect so that the family can grieve properly, can give the proper care that's needed, and can just continue that lifestyle that they're accustomed to. What a blessing that would be to the family. And like you said, then you're writing that narrative yourself of what will they say after I'm gone? Was I a blessing or did I become a burden?
Exactly. Exactly. Yeah, there's a lot to think about. And like you said, they're very common scenarios, but there's just so much for the average person to wrap their head around. We just don't consider our mortality, and unfortunately it is something that we need to think about.
Absolutely.
Yeah.
Absolutely. Well, thank you so much for sharing with us.
Yeah, thank you. Thank you for having me on. I really appreciate that. And, of course, if I can be a resource at any time, just let me know.